Great, thanks, Michelle, and welcome Marcie and Charles. Real pleasure to be here. I was kind of a last minute call in, but I'm really excited to be able to moderate this panel. Obviously, we've kind of changed the panel due to some late breaking news that the whole world is now in on. But just to quickly kind of give a little more of an introduction to our two panelists. So Marcie Bomberg-Montoya. Marcie's a partner in the business solutions practice at Wipfli, a top 20 consulting and CPA firm. She specializes in using a futurist lens and solving complex problems to empower leaders and organizations to reach their highest potential. Lots of great industry experience, has been in financial services and the tech industry for 25 years, and is an advisor, author, educator in a number of different areas. And Charles Potts is an Executive Vice President and Chief Innovation Officer for the Independent Community Bankers of America. In his role, he drives ICBA's innovation initiatives, financial technology strategies. He works with the ICBA leadership to develop impactful value-added solutions to help community banks seize new market opportunities, which I think is a good moment to kind of highlight that, and meet customers' evolving financial services needs. Also, a lot of industry experience, worked for a number of large cores, has been a banker, worked in a number of high-tech companies. So great, really a great panel today. So really appreciate both of you being with us, and excited to kick this off. So the obvious kind of question I'd love for each of you to, well, starting with Charles, kind of love for you to tell me where you were when the SVB crisis kicked off, and kind of give us your viewpoint on it. By the way, for everyone on the webinar today, originally this was going to be a digitize or die digital transformation in the banking industry panel, but given the SVB failure and a number of other failures now, we thought we would kind of go into this topic at this point. So Charles, why don't you kick off? Kind of where were you, what were you doing, and give us your kind of perspective on the failure.
Well, the timing couldn't have been more surreal for us. So at the Independent Community Bankers, last Wednesday, we were all headed towards our annual convention with about 3,000 of our best friends in the community bank space, our bankers, our leadership, the leadership within ICBA, and obviously all of our solution partners as well. So we landed in Honolulu, Hawaii for our annual convention as all of this was unfolding. And as is really in the DNA of community bankers, much of what we saw during PPP and the pandemic, everybody rallied together. I mean, we had all of our thought leadership, we had all of our executive leadership, all of our leadership bankers, our government relations team, our comms team. So we pretty quickly went into kind of the classic war room mode. Commandeered some space at the convention center where we were at, so that we could, operate in a real-time fashion, addressing the needs of the community banking industry, really addressing a lot of the conversation and commentary that was coming out from, all aspects of the industry, executive, legislative, regulatory bodies, as well as bankers and their customers. And I think one of the most interesting things is we also, because of a number of things that we've done historically in ICBA, we had a number of technology partners, a number of fintech partners who were exposed to a little bit of this. And you may have seen some of the stories that have come out in the last few days about, a lot of our bankers rising to the rescue of a lot of these small business commercial customers. And that should not be lost on anybody in this conversation today, that the real potential jeopardy was small business America, the operating companies that were customers of the SVBs of the world, had their operating accounts frozen, had their payroll accounts at risk, and to many of them, they had to scramble to find alternative financial support to make payroll, which ended up happening in the middle of last week. So it was a little bit of a surreal exercise, that we were all deeply immersed in and continue to be immersed in. But it's also very much what community bankers do. They are tied to their communities in very important ways, and all of them rose to the occasion to address the needs where they could of small business America. And one of the companies we work with, he said the CEO said coming out of this, that now I have the phone number of the CEO of my new bank that I'm doing business with. That's community banking right there.
Yeah, no, that's great. I love that quote. Yeah. And Marcie, you, I mean, certainly where Charles was again really interesting place to be for this. But you might actually have been in a more interesting place because you were sort of in the center of the technology side of things. So tell us about like what your conversations were like.
It's rare. Usually, Charles and I are joined at the hip, at a lot of these. But I had committed about 1.5 years ago with a group to go down to South by Southwest. So I'll take Charles Reale and I'll raise that a notch. Right as I was getting on the plane, I was connecting through Atlanta, and the news broke. So as soon as I got on the plane, as you can imagine, everybody headed down to Austin on that Friday morning. It was either filled with actors, musicians, or techie people. Right. So I had another one of my colleagues sitting in the back of the plane, and he and I were texting back and forth. He said, I have people around me that are freaking out on their phones saying, what's our exposure? What's 1% more than 99? It was just, this panic. So of course, the whole flight, everybody had CNBC on their monitors watching, and this was all that was talked about. That's all that was talked about. Now, I was in a unique position in that I was in community banking during the last crisis in the early 2000s. And I saw, although there were a lot of failures, this was a much different situation. And so I was talking to people around me about what happened at SVB, the possible contagion really was not going to affect a lot of those community banks that Charles and I work with, because they had the basics. They understand the blocking and tackling around managing their assets and their liabilities, understanding what a rising rate environment was going to do. But then you had this unprecedented, we haven't seen this in years, run on SVB, right? The run of deposits and panic. So it was such a complex situation. As I was kind of explaining this to people and talking about the resiliency of the banking system, we've seen it time and time again. It comes back stronger and learns lessons from this. I was really reassuring a lot of folks it was going to be okay. It was going to be fine. But that weekend at South by Southwest was a frenzy. And not for the usual reasons that South by Southwest are a frenzy. It was a lot of panic. In fact, there was a interview of the founder of Instagram on the stage, and the interviewer asked the same thing. What's your exposure? And he said, exactly, what's 1% more than 99? And so for him, he said, we're in a good position. Obviously he did really well with the sale of Instagram. So he and his partners were able to bankroll whatever they needed to do for whatever period of time it was going to take for them to understand how the crisis was going to settle. Was there going to be another bank that came in? Obviously the government stepped up, Biden administration, you looked at everything that happened, but this was a real fear. I remember the first phone call I made to my husband when I got on the ground So he said, my payroll provider has all their deposits at Silicon Valley Bank. And this is an arts organization. So when you start thinking of the technology and then the ripple effect throughout, obviously he was made whole by Monday, not a problem, no issue getting their payroll out. But I really think it was a conversation that was a good one to be had to really understand how our community banks do take care of their clients. To Charles' point, right? SVB had a different model than the majority of the community banks that we see out there. And we started seeing, we have about 1,000 financial institution clients at Wipfli. And the outreach, we immediately, all of us, started reaching out to our customers. How are you feeling? What's the ripple effect? And we offered free liquidity reviews, asking our clients if they wanted us to come in and pressure test, right, their asset and liability management, understanding what maybe additional rate increases at the Fed, which they did raise again, what that was going to do to your investment portfolio. But also keeping in mind, Silicon Valley Bank had a tremendous portion of their deposits were uninsured, and most community banks do not. So,
Right.
It was one of those things, if you really start peeling away layers of the onion, what happened there, as scary as it was, second largest bank failure, for our community banks, they're strong and they're resilient.
Yeah, and let me add, one of the things that a couple of things. I mean, first of all, as I think we can all appreciate, social media is filled with a lot of noise, a lot of posers, a lot of disinformation, and what we saw is pretty quickly we could move the conversation to real solid voices with integrity and real facts and real support. And to Marcie's point, the challenges faced by Silicon Valley Bank were very unique. This was not an industry-wide issue. This was a very narrow issue with still a lot of interesting post-mortem to come on what many of us know are a wide variety of factors that went into that. But really quickly, a lot of good, credible voices rose to the occasion, and across the board, when you talk to our members, Marcie's customers, what you find is with most community banks out there, it was a non-event. And in fact, a lot of the community banks were the beneficiaries of this thing happening and them providing a calm, stable voice to the communities they serve, a calm hand on this. We know a lot of our community banks picked up significant business as those operators and entrepreneurs realized they had all their eggs in one basket, if you will. And that I think is going to be one of the continuing lessons that evolves out of this kind of issue, if you will.
Well, Charles, I want to come back to that. So I guess just to give you kind of what I went through when that happened. Of course, we have a private equity investor, so I immediately got the call from my private equity investor. Yeah. What's our exposure? We did not have any accounts in SVB. We were fine, but then we did go through our entire roll of customers to understand what's their exposure. How many tech companies do we have? That's not a big segment of our market, so there was nothing really there. Interestingly, I also saw a flip side of it. I sort of saw this unravel within seconds because I happened to be with a friend who runs a multi-billion-dollar hedge fund, and he had all sorts of shorts and puts on a variety of things, not for anything to do with this reason, but he just has a very gloom and doom outlook of this tectonic shift we're going through now with the changing interest rates and how that's going to just cause lots of segments of the economy to implode. So of course he was watching it, and I was watching his reaction as it was happening second by second. Marcie, at South by Southwest, there was a lot of not blame, but there was, a lot of talk about the social media influence of the venture community that, the comments by Jason Calacanis, Peter Thiel, that also kind of made this a little bit more unique in that that's extremely fast moving. How was that talked about at South by Southwest?
Well, it really proves out a lot of what Charles and I have been focused on with our community banks, is talking about one of the biggest, to your point, tectonic shifts is also in payments. So if you think about the movement of money throughout our banking economy and throughout the economy, it's becoming instantaneous. You wouldn't have seen this quick impact, maybe 20 years ago. But the payments and how much quicker money is able to be moved, right, throughout our system was indicative of that. And going back to the social media piece of it, I was talking with one of my team members this morning. She just picked up 2 new enterprise risk management engagements. And one of the things that they're focusing more on is social media risk. Right? So the social media risk is something she's adding in to the enterprise risk management portion of how we're helping our clients think about the good information, the disinformation. In the age of Twitter, it's like setting, a fire, right, to Tinder. Somebody makes a comment on Twitter or one of these other social media sites, and it starts whipping people up who maybe don't understand exactly how a lot of this works. Yeah. But one of the things, though, too, Brian, I wanted to go back to is one of the lessons, or 2 lessons, as I was talking to people at South by Southwest, was one gentleman said to me, there was kind of a groupthink mentality in tech where so-and-so went to Silicon Valley, so-and-so went here, so-and-so went there. Well, I'm going to follow suit without saying what is really good for me, what makes sense for me. And now people are looking at more of the diversification strategies of not putting all their eggs in one basket, thinking that a bank is too big to fail or that something like this couldn't happen. So from that perspective, they said, it made me realize, this one gentleman said, I need to do my own research and figure out what's the right way for me to manage my money. Because a diversification strategy makes all the sense in the world, but why didn't I do it? Because everybody else was there. So, there was a lot of that discussion that was being had, a lot of what responsibility, do we all have, in the ecosystem to really understand the movement of money, the flow of money, and the impact and what that has. There was one other piece of this that we were trying to explain to some of the folks there, is that during the pandemic, most banks, including Silicon Valley Bank, had record liquidity. They were flush with cash. And then the world woke up. Cash started going out again. Businesses started flowing. But what they had already taken is a lot of that money had been reinvested, right, in lending out, but also in investment, because that's how banks make money, right? It's through the spread, the lending, and investment. And so a lot of this was tied up. So, you talk about the interest rate increases and all of that. Well, if we're having a liquidity issue and we need to liquidate some things that are now underwater because of rising interest rates, you start seeing that domino effect that's occurring. And as you start talking about the complexities around, I know the dinner table that we were talking one of the nights, there was a lot more aha moments of understanding the complexities and saying that we need to be a little bit smarter too about what we're doing.
Yeah, I think it's.
And I was just going to say, and to Marcie's point, one of the things that I saw and witnessed is, to some respects, a lot of the work, a lot of community banks, I'll say, were challenged to do because of PPP, paid off for them. kind of coming back to the original theme when we talk about digital transformation, banks put in place a lot of the tools they needed to handle, rapid onboarding and new account origination. And many found themselves spinning that up and using it over the weekend to help some of these businesses open new accounts and move that money where they could. And I think these continue to be very important lessons and reminders. And Marcie and I talk about this all the time. We tell banks, don't forget what you did in the midst of that battle that applies or should apply to your new go forward way of behavior, business as usual. PPP let a lot of banks leapfrog 2 and 3 generations, if you will, of their strategic planning in a very short period of time. And now they've got in place a lot of those tools and those platforms that they could leverage in a very important way that weekend. And since then, I mean, I talked to a bank this morning who is continuing to see new account activity as the dust has settled. And to Marcie's point, these businesses are saying, okay, now let me make some independent decisions on where I'm going to bank. And, lo and behold, what many thought was the secret sauce of a Silicon Valley bank, every bank has.
Mm-hmm. I think just to add to that, Brian, for a moment, if you'll indulge me, is that digitization, right? The technology, to your point, that they spun up during that time, Charles, they're in a perfect position now to say Silicon Valley Bank was not a unicorn, and that they had these tools that you needed. Look at us community bankers, we have these tools as well. And
there's no magic.
Exactly.
Yeah, I think again, the big postmortem is going to be a bubble burst on that theme that somehow they were a unique magical bank with some special technology, magic dust. And the reality is, small business America, they're, those startup companies, those emerging companies, those growth companies, both in fintech and health tech that they banked, are looking around and going, wait a second, these community banks have great treasury management tools, great commercial banking capabilities, all of the things we need to properly operate our business in a sound and resilient manner with the high touch relationship that is unique to community banks.
Yeah, I think to Marcie, to your earlier point, I mean, it was really maybe SVB was just the result of herd mentality.
Mm-hmm.
That was kind of what was driving it, and now the cloak is removed. So what do you think now? I mean, as a fallout of this from a regulatory standpoint, what do you expect to happen? And was this specifically sort of a result of Trump pulling back on some of the Dodd-Frank and raising the from 50 to 250 billion in assets? Would that have, if he hadn't done that, would that have had an effect on this?
The math doesn't work. I mean, again, if you've got 97% of your assets uninsured, I'm sorry. And again, I'm not going to dive too deep in the policy side. That's for the most important part of the ICBA that frankly, that it's an amazing group. But let's not forget something else that you talked about earlier. These were public companies. So if you go back and you actually look at the time clock on exactly what was happening, a lot of what happened started at Wall Street, started with hedge funds, starting with the shorts. This was an attack on the stock price of those public companies first. That is a whole unique issue in and of itself that then got lost in this conversation about liquidity and about the insurability of their deposits. I think again, there will be some pendulum swing. There will be some refinement of the regulations. And look, Congress and the legislature and the executive branch have to perform, right? They have to show something is being done. So, I'm sure our GR team is heavily, behind the scenes working to make sure that this gets navigated as best as possible for the community banks that we represent. Where does that number get moved? I don't know. But I think, relative to the overall banking system, there are larger financial institutions with a lot more at risk who should pay more for the risky behaviors in which they engage. That seems to be the evolving theme out there.
Mm-hmm. And one of the things that we've seen too is there's always that fear of overcorrection when something like this happens, when you have those headlines that hit. But in looking at the Fed's last increase, so Jerome Powell, I'm just reading off my phone here, if you can indulge me, said that the American banking system was sound and resilient, right? And that the Fed was prepared to use all of its tools to keep it safe. He said that officials were ready to learn from the collapse of Silicon Valley Bank, and not to the fact that the Fed was their primary regulator, right? And admitted that they didn't address the problems at Silicon Valley Bank before it was too late. So there is a quote that Jerome Powell said, "It is clear we do need to strengthen supervision and regulation of banks." What that means, we don't yet know. This is a very complex, we have a lot of regulatory agencies, right, in our banking system. We've got different administration priorities. But I think Charles and I, and to Charles's point, the ICBA has fantastic group of people that follow these regulatory developments. We also at Wipfli are in constant contact with the regulatory agencies, wanting to really understand what's the sea change that might be occurring. And the majority of our banks are also not the too big to fail type, right? And so for them, the threat to the system is less. Right. Charles's point on a lot of these larger money center banks, or those that do create systemic risk, that's where I think we'll see some additional conversations, probably at the highest levels. You're going to see some hearings happening. You're going to see a lot of people being called to Capitol Hill to answer some tough questions. Those are always, blood sport entertainment to watch those. But what will come out of that? My crystal ball is that clear right now.
Yeah, if they can stop talking about TikTok long enough to.
Right.
So mind numbing if you got a chance to listen to some of that congressional testimony today.
The ignorance is bliss is certainly a phrase we could use for that, right?
Yeah. And Brian, I mean, I don't want to be dismissive of your earlier question, but the reality is, look, that there will be there's a lot of blame to go all over the place. There's also, to Marcie's point, a lot of rules and regulations in place that need better enforcement. So somewhere in between will be the typical kind of reactionary behavior of legislators and executive branch people.
Charles, do you think, and well, for both of you, so FDIC insurance, I mean, should that be universal? What is the ICBA? I mean, like we said, it's not really an issue in the community banks because the deposits per account aren't reaching the kind of levels that SVB had. But is that a moot point? I mean, can we basically assume at this point that, I mean, there've been 536 bank failures since 2001. Nobody's ever lost a dime of their deposits.
There has been for decades mechanisms and ways that community banks have offered their depositors to make sure their deposits are safe and insured above the $250K limit. that is not a new novel thing. And all banks have access to that. The decisions some banks make to not offer that additional insurance are the things that need to be investigated and addressed. I mean, when you have a large bank like that with 97, whatever the number, you pick a number, but it's up there around 97% of its deposits were uninsured. And these are, this is venture capital. These are the operating accounts of, startup, early stage, fintech companies. That question needs examining. You can look all over social media now at again, some of the very important thought leaders in the community bank space, educating the world on how this works and should work. I mean, there are community banks all over this country with very large commercial deposits that are totally insured.
Mm-hmm. And Brian, to that point, I was asked to write an article, and we published that through our Wipfli social media channels about the insurance fund. And there are so many, to Charles's point, there are so many opportunities in creative ways. There really is no reason why you should have any of your funds uninsured. It's not just based on the individual, it's the type of ownership, it's the type of account. There's also, I go back years, 27 years when I was
transaction types,
when I was first in treasury management at a bank and doing repurchase agreements, for a lot of our municipal customers to make sure that their funds were insured. There are programs like a CDARS, there are programs, like Wintrust has a program amongst their family of banks. There are, all you have to do is ask, quite frankly.
By Stonecastle, I mean, there's
a myriad.
And they've been around for decades.
Mm-hmm.
Yeah, I found myself looking into the ICS CDARS type products for the first time. Spent a lot of time reading about that, and I didn't know about that.
Intrify is one of our ICBA corporate partners, and
seems like a great service.
It's a great service, and we got thousands of financial institutions using these types of service to prevent the kind of risk that that we saw with some of these these more narrowly focused financial institutions.
And going back to your earlier comment, so are you seeing, both of you who are having all these conversations with community banks, have the last 2 weeks just been massive account openings in community banks? Has it been a great
scale,
2 weeks?
I would say in relative scale, I mean, it has been, for the most part, very positive. A lot of community banks have taken on a lot of new commercial deposits, new commercial customers. It's been, a very positive thing. I don't know that I would speculate on what the gross numbers are and, how you would qualitatively address it. I would say most banks, two things come out of most bank executives right now. One is community banks. One is not a lot of anxiety from the customers calling them, not a lot of calls, not a lot of anxiety. And number two, some very good strategic new business that they've been able to acquire.
Mm-hmm. There was an interesting effect. We have a large, also at Wipfli, we have a large nonprofit client group as well. So there was a lot of discussion. A lot of our community banks give to their communities on the regular. They're involved, they're on boards, they put together lines of credit, they actually give and gift to the communities. And that was a significant impact that Silicon Valley Bank also had on the nonprofit community, because they funded lines of credit for things like affordable housing. So when we start thinking about that ripple effect for our community banks that already do those kind of things as a part of not just their CRA requirements, their Community Reinvestment Act requirements, but because they're involved in their communities and they know their communities, it's a part of what they do. right? It's a part of their involvement. That this is something that I've had a discussion with several bank CEOs saying, we are advertising more to our communities what we have been doing since our inception. So they understand it's not just the big banks that give to their communities. We do this too, and we provide those runways for our communities. And then also, I think for the positive spin, and Charles, you touched on this, we're safe, we're okay. We saw our friend Jill Castilla go out there immediately, Charles, right? Talking about let's bust the myths. Here's a community bank, here's what Silicon Valley Bank was. And then also things such as the FDIC calculator. A lot of people don't know that even exists on their website, where you can go, any member of the public can go out with the FDIC calculator, put in their information, and they can see what their exposure is. But talking to their bankers, this is where bankers have said to me, this is a boon for them. They don't know what the long-term effect is going to be, but yet again, like PPP, the community banks are doing the right thing.
Well, and like you said,
I was going to say, Brian, in some way, I think your audience should think about this like a natural disaster that hit a very targeted, localized area, and how everybody around came to the rescue. And that's what I saw, we continue to see with community banks out there.
Yeah, well, and I think like you were both saying earlier, I mean, I think the systemic risk really starts happening once it gets divorced from the real world and real people and Main Street, and so, you know, maybe it's a wake-up call to, hey, be involved in your community, and that's where ultimately, that's where the protection is ultimately, because if, you know, there's actually somebody to, you know, it's real people doing real things, and I think this is that's the kind of view I see in this.
Well, and unironically, we also, while we were going to our national convention, we're rolling out and launching our new national Bank Locally campaign. So, you know, you go out on social media, look up Bank Locally, and you'll find all of the right stories and messages really speaking to, again, how the community banking world is very strong, it's very resilient, and it's very responsive to these kinds of needs for these small businesses.
Yeah, and I think it goes beyond banking in corporations. You know, as corporations become too big, too global, too divorced from the communities they serve, you know, it gets away from the kind of true roots of capitalism, which is like, if I sell you a chicken and you get sick from eating that chicken, you know, to come back to me. I mean, it didn't come from halfway around the world to you.
Well, and I love this comment out in the Q&A section from Matt Huber. Absolutely, we heard this. We continue to see this. You know, the core providers, all of the technology providers that we're close to. I mean, they all, just like the banks, I mean, they all kind of rose to the occasion. They all responded to the opportunity and the need. You know, the setting up a sweep accounts. I mean, to your earlier point, Brian, you've gone out and learned about IntraFi and ICS and sweep accounts. I mean, I have had people that I have known forever, non-bankers, who in the last 2 weeks, they're like, well, what is a sweep account? Can you explain sweeps to me? It's been, I think it's been very good for the consumers as well to kind of pay attention to, you know, how their financial institutions operate.
Yeah, and just to read that comment, because that's great that you pointed that out. Matt Huber says, our core provider had a 3,000% increase in requests to set up sweeps for ICS accounts.
That's awesome. That's just awesome.
Yeah, that is that's pretty interesting. So kind of one last question here. The industry itself, in terms of the number of banks and M&A in the community banking and regional banking space, does this, what effect does this have on it? Does it accelerate? Does it change it? Does it you know, have a meaningful impact there?
Well, Charles and I might be able to have a lively debate, or we might violently agree on this. Don't know. But I don't think it will. I don't think it will have an impact at all on M&A. The major drivers that we've been seeing amongst our clients, and we have a whole M&A division, has been succession has been an issue, amongst community banks, causing more consolidation. So succession at the leadership level and succession at the board level, lack thereof. But then also technology. So going back to the original theme of, really innovate or digitize and die, it's, do we have the right mindset and the desire to ensure that we have the right technology partnerships in place to be able to meet consumers where they want to be met? And when we say consumers, we mean small businesses as well. They really behave like consumers when you think about what they're looking for. So those banks that are spurring that, I don't think that's going to be a factor for most. Are we in violent agreement again, Charles?
We are, because look, again, beyond the noise that we've lived through in social media, almost everybody who has been in banking understands exactly what happened. This is not magic. It's not mythical. It's not, something that's just hard to understand. If you've been in banking, if you've done asset liability management, you understand basic, ALCO processes in a bank, hedging and risk management. What do you do with securities in a rising rate marketplace? This is not, unknown to us. So the concentration of business that this unique bank had is a unicornish thing. And to your question, it's not really the underpinnings of what goes into kind of the common M&A practices.
And one point there, we've got a lot of international viewers on this webinar, and most don't really understand why we have so many banks in the U.S. Right? There's no other place really like it in the UK.
I got a simple answer for that. Having worked and sold around the world as well, and run international organizations dealing with some of the globe's largest banks, we have 25 million businesses in the United States. They need choice. They need options. 70% of all small business loans come from community banks. 80% of all farm and agricultural loans come from community banks. The small business America that drives our economy, that drives job growth, that drives job creation, depends on local community financial institutions to help them do that. The 4 or 5 largest banks in the country cannot meet the needs across this big, wide, diverse country we have, with all of these business opportunities that people are creating every day. And that is the biggest differentiator between our 2-tiered banking system and the rest of the world, is choice and the opportunity to grow our economy through small business creation.
Drop the mic. I have nothing to add to that.
And you don't see that going away anytime soon?
You want to kill our economy?
Yeah.
Right. Kill job growth. That's, you want to go start a business in any other country, your choices are limited.
Yeah. No, that I can certainly attest to that. We do business in a lot of places, and you're right. Nobody's going to sit down and understand your business. That's for sure.
No. So I'm incredibly proud of the social fabric we have here in the U.S. that allows people to take their ideas, just like you guys, and go and create a business. And without the kinds of financial institution options that are available, that just becomes monumentally difficult.
Well, if there are any questions, we have a couple minutes for questions. If not, I'll give you each kind of couple minutes to make some last comments, if you will, starting with Marcie.
Well, thank you for having us on first, Brian. Charles and I we're we like to joke around, where he's my brother from another mother, right? We have the same mentality on how we feel about the community banking ecosystem. And when we talk about the community banking ecosystem, it's the marriage really between a lot of our technology companies that are inventive, innovative, are looking to solve real problems, understand the user experience, understand the consumer experience, understand now more and more what it means to be in the US banking system. So that marriage really creates a stronger US banking system by having our community banks marry with a lot of our really inventive technology companies that are solving for real problems that our bankers, they know how to make loans, right? They know their communities, but they're not always the most inventive. And that's where this is a stronger tide, I think. And I'm very, very excited about where our bankers are going in their partnerships, like the ICBA and their Think Tech Accelerator, other groups all around the United States where bankers are leaning in and learning more and understanding how they can really meet the client needs in unique ways. And that's where Charles and I are really excited about seeing how these partnerships are becoming more and more comfortable. And it's better for the banking system. It's better for our technology ecosystem. It's better for the consumers all the way around.
Totally agree. And again, thank you, Brian, and to the team for having us today. It's kind of interesting that obviously the events of the last week kind of changed the initial narrative where we started with this conversation. But the reality is the events of the last week actually highlight the underpinnings of what we wanted to talk about, and frankly, what you and all your partners, I think, offer to the banking world. And that is a way to create better, more seamless experiences, really meet the needs of the customers that our banks are trying to serve. Your business automation platforms become even more necessary when you see these types of challenges and opportunities. And I appreciate the opportunity to really share with your audience, our view on what's happened, but I don't want it missed that y'all are in a great place as an organization, and we really appreciate the work you're doing. Really arming our financial institution customers with the tools and capabilities to really meet the needs of the market and the communities they serve. Because ultimately, that's really what we're all trying to do. We're trying to figure out the best way, the most efficient, the most effective way to meet the needs and tighten those relationships that are critically important to the banking system. And I appreciate the work you and your team do, and because y'all play a very important role in that process, Brian. So thank you.
Well, thank you, Charles. And I would add that this has been really interesting for me, because I realize to Marcie, to some of your earlier comments, about and also this idea of kind of how SVB was sort of isolated, and what causes systemic risk, and what it means to be divorced from your local community. The views that you both have compared to what I've been reading, and the kind of things that you do naturally hear in the media. So again, this idea of centralized media, the ICBA kind of viewpoint is really refreshing to hear. Because it's interesting, and a lot of it is accurate in terms of why around the failure, but understanding what this means for a larger kind of community banking ecosystem has been really I think a unique perspective that you both bring, and so I really appreciate that, and truly appreciate your time to be on this with our viewers, and really thank you both for your participation, Charles and Marcie.
Well, thank you. And to your audience, thank you as well for giving us your time today. I appreciate it.
Thanks again. Have a great day.
Thank you.
Thanks.
Bye.
Bye-bye.